Hello, and welcome to myfinanceteacher.org. Again, let's have a look at a review of markets, starting with the US dollar, how it affects the precious metals, and we'll also have a look at the general stock market. Well, over the last few days, since 25th of February, US dollar has actually been doing well. It bounced up from the bottom of the Bollinger Bands, back close to the top of those Bollinger Bands, and what do you see over the same 4 to 5 days? Gold has actually dropped quite a lot, as we were expecting in the previous video, down from above 1800 to just under 1730 at the moment, which is quite painful, but I think gold is ready to bounce any day now, either today or over the next several days. So I think over the next few days, even though dollar seems to have started a new short-term daily cycle, and dollar might stay relatively strong over the next few days before turning down into the end of the ongoing daily cycle, I think the negative correlation between dollar and gold is going to be relatively weak over the next few days. As we see, it's already weakened quite a lot over the last few days. This, by the way, is a 20-day correlation. And I think while dollar might tend to stay strong over the next few days, gold is nearly ready to bounce. And what are the reasons for that? Well, firstly, the daily cycle is now 43 days old. And usually the short-term daily cycles on gold last between 1.5 to about 2.5 months. So again, gold might still continue down for, say, another few days before some sort of a nice bounce, at least to retest this downtrend line that gold has been following since the early February. And actually, I think the bounce will go much further, at least up to the 50-day moving average and to the upper range of the Bollinger Bands, as a new short-term daily cycle is going to start in gold. There is also a small chance that a new intermediate cycle is going to start in gold. If the ongoing cycle continues for just another few days, let's say it lasts until, let's say, the end of this week, that's 46 days, and the previous cycle lasting for 49 days. That gives you a very short intermediate cycle lasting for just over 3 months, which is unusual, but it's not unlikely given how oversold gold is. And if we're going to see a start of a new intermediate cycle over the next few days, then the performance might actually be pretty good in gold. So I do expect a bounce over the next few days. The question is, though, how strong is the bounce going to be? And it will depend on whether the new short-term daily cycle is going to be part of a new intermediate cycle, or is still going to be part of a continuing intermediate cycle that will still give us a lower low in another few weeks. Some of the reasons why I think there is a chance for the intermediate cycle to be relatively short, just over 3 months this time, is that gold, as I said, is really pretty oversold. The 14-day RSI yesterday was as low as 29.5. That's actually lower than it was at the end of the previous 2 intermediate cycle lows, here at the very end of November, and even back in the significant drop in gold back in March 2020. And even if you go back in time on these charts, a lot of those previous intermediate cycle lows didn't actually bring RSI as low as it is right now. Here, for example, in late 2019, 14-day RSI was much higher than it is right now at the end of an intermediate cycle. Same thing over here in the middle of 2019. Again, 14-day RSI is not even into oversold area. So gold is quite oversold right now. We see multiple pokes below the relatively wide Bollinger Bands. So a bounce is really due either today or is going to start sometime this week, perhaps by the end of the week. The question is, again, how strong is this bounce going to be? Next, let's have a look at the general stock market. And before we continue, let me remind you guys to subscribe to the channel if you haven't, and click that bell notification. Thanks a lot. To be honest, the general stock market is a little bit puzzling. I'm still cautious on the general stock market. The ongoing short-term daily cycle was only 31 days long yesterday, and the ongoing intermediate cycle yesterday was 158 days long. So that's possibly pretty close to a decline into the intermediate cycle low, as these intermediate cycles usually in the general stock market last for a little bit over half a year. So we possibly still have another only 2 to 3 weeks before the end of the ongoing intermediate cycle. Of course, sometimes these cycles can stretch, and perhaps the general stock market will continue higher, perhaps with a lot of Fed support, before actually dropping into that intermediate cycle low. So that is why, as I mentioned, I'm a little bit uncertain on the general stock market. When we are early in the ongoing intermediate cycle, as it was here at the end of 2020 and somewhere near the beginning of 2020, back at March lows, that's when we actually want to be a little bit aggressive with the stock market. And that's when I updated the members at myfinanceteacher.org that I was entering into the triple Qs and SPYs and things like that. But at the moment, I'm a little bit nervous about the stock market. On the other hand, though, I really would like to participate in this push for, let's say, new all-time highs over the next couple of weeks before a drop into the intermediate cycle low. But perhaps entering right here would be relatively risky. Let's have a look at Nasdaq. If you kind of look at this chart for a while, you might start to discern a bit of a shoulder here, perhaps a head over here, and maybe a buildup of another shoulder over here, so a head and shoulders formation before the general stock market drops into the intermediate cycle low. Perhaps. It's still a bit early to say. Well, when is it not going to be early to say? When this head and shoulders formation is broken and Nasdaq is above the head over here. But again, by then there probably will not be that much upside left before the intermediate cycle really would have to go into some sort of a correction. On the other hand, though, maybe the stock market has already put in the end of that cycle that started in late 2020, in which case there will be a lot of upside as we are very early in the ongoing intermediate cycle. That is, of course, also a possibility, although this correction into the end of the intermediate cycle wasn't a very severe one. And looking at the optimism index on the S&P 500, we see that the previous intermediate cycle low brought this optimism index back down to around 55. And most intermediate cycle lows bring this optimism index at least down to that 50-something range or even lower. At the moment, though, market optimism has only dropped from over 80 to just over 70. So that's, I think, not really enough of a correction down for an end of an intermediate cycle. And looking at the CNN Fear and Greed Index, the most recent correction was only down to 48, just under 50. And the correction about a month ago was down to around 35. That's this correction when S&P actually corrected relatively mildly down to retest the 50-day moving average. That was only the end of the short-term daily cycle rather than an intermediate cycle. Coming back to the CNN Fear and Greed Index, you see that usually the end of the intermediate cycle comes with the CNN Fear and Greed Index coming as low as around 30 or so. And looking to the top side of the chart, you see that since the late 2020s, CNN Fear and Greed Index is giving us lower highs all the time, whereas the general stock market since the end of 2020s has been actually giving us higher highs. So a bit of a negative divergence here as well. And we also can see a bit of a negative divergence on the RSI since January into February. We see that the general stock market, S&P 500, keeps giving us higher highs, as you see from this crude black line, whereas RSI keeps giving us lower highs. This again tells you that in the intermediate term, it's possibly advised to be cautious with the general stock market, as the correction into the intermediate cycle low should probably be expected over the next few weeks. But in the short term, some, and I'm also in that category, some might be greedy for this another run higher before that correction. So that's why, as I mentioned, I'm uncertain on the general stock markets. I'm a little bit on the edge over here, leaning a little bit more into cautious territory. So sitting on the edge, I would really like to know what you think. Are we going to see new highs in the stock market in March? Or are we going to drop below the most recent lows to correct a little bit and cool down some of this optimism in the markets? Let me know in the comments below. And before you start typing those comments, talking about the optimism in the markets, we haven't actually looked at gold optimism. I forgot to click on this tab. And looking at the optimism in gold, again, as I said, it is becoming a little bit oversold on the chart itself with the 14-day RSI. But with the optimism index, it doesn't really look that oversold. The optimism index is just below 50. Often it's a good idea to accumulate gold when optimism index is closer to this green line, just over 30. But if you don't look at distant history, if you look at the most recent couple of intermediate cycle lows back in late 2019 and early 2020, you'll see that those intermediate cycle lows were accompanied by this optimism index relatively close to 50 rather than 30. So again, I think gold is due to bounce over here. Is that going to be a short-term bounce into the short-term daily cycle? Or is it going to be an intermediate-term bounce into a new intermediate cycle? That still remains to be seen. And that is gold and the general stock markets for you. If you want to have a look at other assets, we do look at energy, a lot of different kinds of commodities. And I have a colleague writing newsletters on longer-term investment strategies. You are more than welcome to join us at myfinancesteacher.org. You can do that by clicking this register button. The first month is only $5 and it's $10 per month after that. Some of the most recent trades that we made is we entered into crypto positions, which are now 2 or 3% higher already. But of course, with crypto's volatility, 2 or 3% gains are not really much of an achievement. But as I mentioned in my recent videos, I think there is a good chance that cryptos might do well relatively soon. Link to that video at the top of the screen right now. Before you go to that next video, let me wish you a wonderful day and good luck in your trades.